I know everybody's focusing on Ethereum and Bitcoin today. Just check out Twitter and you will see. But we talked about that last week, and I hope you made some good money trading Ethereum. We did talk about short selling it, and we also talked about the risks to Bitcoin. You might remember that the price was stuck in this range, this descending triangle, and I said that on a break to 1,698 we could trade it to about 1,357. We are right now at about $1,200 per coin. I do think we can go lower, but the risk to reward ratios are not in Ethereum right now or in Bitcoin. We need a corrective move there to be able to enter and have some sort of decent risk to reward ratio. Instead, what this presentation is all about is about gold and silver. So gold actually pushed a bit to the upside on the inflation numbers last week, but since then is coming down a little bit because it doesn't seem that people are too keen on buying gold to hedge against inflation, which that's what people usually do. But it hasn't been like this for a long time. So gold on itself, we can't really not do too much with it because it's stuck in a range, but silver is very close to break out from its range. So you're looking here at the daily chart, and I know that this is not a perfect rectangle, but we have been stuck here for 26 days. And what's important when you're trading breakouts like I am is that the pattern is at least a bit mature, like in this case 26 days. If you have maybe 3 months, even better, but 26 days many times is enough for me, especially if you can couple it with a macro fundamental story. So you have a few things, right? You have inflation being high, and that is strengthening the dollar. You have Euro USD lower, you have GBP USD lower, Aussie dollar lower, New Zealand dollar lower, you name it. Most currencies are down against the dollar, but gold and silver are not. So it makes it more likely to me that we're gonna break this range. And it's much more difficult here to sort of say exactly what we're looking at, but we can treat this like a double bottom, and a break to a double bottom will give you the difference between the high and low. So it's the same interpretation you would have for a rectangle. So from that perspective, we can go down to maybe 2014, and break to the low here is what would trigger this. And usually, like for here, for example, a stop loss would probably be sufficient to just place it above the high here from midday London time, and that gives you a 2.73 risk to reward ratio. I know it's not a great one, so I would actually prefer if we can break out tomorrow. Say, for example, we close here today, have a bit of a corrective move tomorrow, and then push lower. Then whatever is the high that we create overnight, or maybe in the London session, or maybe in the opening of the US session, could potentially allow us to put the stop loss just above that level and then break to the downside. If you are trading with ATFX, then don't forget that I actually have a special course, the premium course, available to you guys in the client portal. In there I talk more about how I trade with classical chart patterns. I hope you enjoyed this video, and if you did, don't forget to like it and share it with your friends. Thank you.